Well, economic data getting overshadowed in markets once again as big banks and big tech send all three major averages lower. Joining me now on this are Argent Capital Management Portfolio Manager Jed Ellerbrook and Luke Tilley, Wilmington Trust Chief Economist and former Philadelphia Fed Economic Advisor. Guys, welcome to you both. Luke, I'll start with you as the economist on the panel here. We got a rush of economic data this morning, Luke. You got retail sales, wholesale inflation, existing home sales. What'd you make of what you saw today, Luke? And just also more generally, your overall take on the economy, Luke, where we are and where you think we're headed.
Yeah, sure, Josh. I thought that this morning's retail sales report, even though it sort of drove headlines and there was a lot of positive reaction, when you take it with a couple of weaker months that we've had previously, it really kind of looks like a slowing consumer. When we correct for retail sales over the past 3 months, they've moved into negative territory once you correct for inflation, because the things that really made the retail sales pop in today's report, and so this was November retail sales, things like clothing, apparel, sporting goods, and a lot of those we can see in the CPI data had pretty steep price increases driven by tariffs and some other things. So if we're thinking about real GDP and what's going on with consumer spending, it has really slowed. And that calculation that we have of year over year, real retail sales is now slowed to below 2%. We have it at 1.7%, whereas it started the year right around 4%. So we see a slowdown there. And of course, that would be expected given the slow job growth that we've had. And so we continue to see just a slowing of the consumer, not a decline, not a retrenchment, but a little bit of a slowdown. I think the good news there is that, like you said, we got some wholesale prices, and that combined with the CPI report, we continue to see slowing inflation. And we think the Fed's going to be cutting rates even before mid-year. We think they'll cut multiple times, Josh.
Jed, I want to bring you in as well and get your take on the economy as well, Jed. I thought some of the commentary, Jed, that we're getting from those big bank CEOs, I thought that was interesting, their take. Here's Bank of America CEO Brian Moynihan today. Consumers resilient, he says. Businesses resilient. We are bullish on the economy in 2026. Jamie Dimon yesterday, U.S. economy remains resilient, he says. Consumers continue to spend. Businesses are healthy. He says these conditions could persist for some time. What do you make of it, Jed?
Yeah, I agree with Luke's points earlier. I think his perspective is right. You're also right. The big bank commentary has been mostly positive. I'll throw in there Delta Airlines comments too. Their main point, as I took it, was main cabin kind of weak, first class trends, premium seating really, really strong, and a strong outlook. I think that's a pretty kind of clear story on the state of the consumer these days. And outside of this really big accelerated compute investment cycle we have going related to power and data center construction, I see a mostly slow growth, positive but slow growth economy.
So, Jed, we heard Luke and his take on the Fed. What's your base case for 2026? How many cuts?
Yeah, I think Luke is right. I think the market is projecting 2 today, if my memory serves, and I would take the over on that, over on 2 cuts in 2026.
Luke, what about Fed independence? I'm just curious how you're thinking about that, given recent headlines.
Yeah, I think that clearly the loss of Fed independence would be really troubling, as it would drive long-term bond yields higher. We see that in countries that have a central bank that's sort of captive to the fiscal authorities and to the president or prime minister. It's mostly emerging market economies that experience that. But the market reaction has been pretty muted since the announcement of the investigation, criminal investigation of Chair Powell, and that's because there are a lot of safeguards in place. One, we've already seen the Senate, members of the Senate Banking Committee come out pretty strongly against this. And that has always been a pretty good check on presidents from both administrations, usually behind closed doors. There's a lot of people who are mooted to be nominated to the Fed, and then sometimes they just sort of quietly retreat. Kevin Hassett, just a month ago was leading, and then all of a sudden sort of faded. And I think that was discussions going on behind the scenes. The other part of it is that the Fed independence is really built in. President Trump only has one nomination. If at the end of this month with Stephen Miran, when his seat comes up. After that, if Chair Powell decided to stay on after his chairmanship ends in May, he could stay at the board until January of 2028. That would be unusual, but if he's worried about independence, he might do that. But those are the only 2 seats that are going to come up. unless the firing of Lisa Cook goes through. So there's very little wiggle room for the president to nominate people to the Fed, and we think that the Fed independence will be maintained.
Jed, I want to bring you back here as well on another topic. That's, listen, international news continues to dominate. Geopolitics dominates Iran, Venezuela, Greenland. How, Jed, as an investor, are you thinking through that, navigating those dynamics?
Yeah, I feel like investors are being thrown curveballs at a rate never seen before by a presidential administration. No matter what sector you're investing in, whether it be tech or energy, industrials, financials, you can go on and on. I think an investor needs to have a firm grasp of their investment thesis behind each investment and then stick to that when a whole bunch of unrelated or adjacent noise comes at you from either the administration or earnings season or whatever. If you don't have that anchoring, you are bound to be whipped around to and fro by all the news that's being made every day by both the administration, but also the geopolitics stuff, energy market stuff. List goes on.
Luke, another theme here, and my colleague Inez was hitting on it, gold and silver. I'm sure viewers are tired of hearing me saying it, but again, climbing to new highs again today, Luke, extending this just blistering rally. As an economist, Luke, how do you make sense of that? What message is that sending me?
I think it's a continue of a move to safe havens. We've seen the growth sector and the NASDAQ sell off a little bit today. You've got some nerves about where the U.S. is going, and there's a little bit of a sell America trade going on here. So they serve as safe havens, and a lot of investors move towards that. And I think understandably so, because it is a safe haven asset if other assets look like they could be, suspect to a decline, to a downfall in some way. So I think that an environment like this is going to drive it up on the day. More broadly, we're still optimistic about equities. We're neutral to them, not overly enthusiastic, but our investment committee is neutral to equities, neutral to fixed income, and we're waiting to see how the economic environment plays out. But certainly gold and silver are going to catch a bid on days like this, Josh.
Jed, I'll end with you here. Your top idea for 2026, Jed, your top buy, what would it be?
Yeah, this is where Luke and I depart. I'm a little bit more optimistic on the stock market here in 2026. And my favorite idea, largest overweight in our strategy, ticker ABIG, is Amazon. Amazon is liked by a lot of investors, but the stock hasn't done very well over the last year and a half due to a variety of factors, concerns about their cloud computing unit growing slower than peers, concerns about tariffs 9 months ago. But Amazon is set to do extremely well both in 2026 and going forward. Their cloud computing organic growth is going to pick up. It accelerated last quarter. That's going to continue for all of 2026. And margins in their retail business are going up, all while they're basically growing at twice the speed of every other big retailer in the country. So I think Amazon is an excellent business. I think it's being well managed by their CEO, Andy Jassy. And I expect, 20 to 30% earnings growth for the next 5 years.
Jed, I will tell you, I recently had Mark Mahaney and Doug Clinton on the show, two of the smartest tech analysts I know. They both agreed with you. They're both fans of Amazon. So you are in good company there. Jed, Luke, great to have both you guys on the show. Thank you.